Tokenize, let's innovate, bringing answers to the digital state. From finance to games, we're redefining, connecting the dots. The future is shining.
So first off, tell me who you are and what you do.
Okay, so hello everyone, my name is Kevin. I'm the core contributor of Go Network, which is a Bitcoin layer 2 building on top of Bitcoin to inherit the native security from Bitcoin, but also bring more use cases and more usage to Bitcoin and Bitcoiners.
I like that. I have been looking and waiting for functionality on Bitcoin, so I'm very excited about that.
So my name is Charlie. I know Kevin actually from last cycle. A lot of people get to know me because of Polkadot. First round of Polkadot in 2017, brought them to Asia. Last cycle, 2021, I was head of APAC in Polygon and done a lot of like Web3 gaming and metaverse applications. First week on Ordinals, that's how I orange peel myself, joined a Bitcoin community. So we started in 2023, one of the first team deep dive on BVM. So we've been 18 months coding BVM, building on the solution. So we launched the BVM bridge a couple of months ago. Currently working with 8 top ecosystem, including Sui, Cardano, and a few others like Base and Arbitrum. Our rollup is launching very soon. Last year, our VUM mainnet, we have like 55 million transaction. All-time high, we hit a 1 billion TVL, 280 projects now. We're backed by Polychain, Franklin Templeton, and a few other folks.
Awesome. Okay, so I'm assuming BVM is like EVM, but for Bitcoin.
So,
Bitcoin virtual machine?
It's not word by word like that, but you can understand in that way, in a layman term. Yeah.
Okay, so what are you most excited about? I mean, Bitcoin, DeFi. What are we doing that's beyond, staking your Bitcoin to earn interest? Like, what are the exciting things that we have to look forward to that technological advances have allowed us to do not until now?
Yeah, actually, this is an excellent question. There's a website recording every day's Bitcoin gas revenue. Yesterday's number is 500,000. Only 500,000.
That doesn't sound like a lot.
Yeah,
That's empty.
yeah,
That's empty.
it's nothing. To compare with the large token assets of Bitcoin, the gas transaction is so low. So I think that's the meaning for Bitcoin layer 2, for Bitcoin DeFi to be existed. We need more Bitcoin assets to flow, not just stay in everyone's cold wallet. So I think finally it's time that we see that technology advancement to make that Bitcoin layer 2s can really inherit the native security from Bitcoin. So the applications building on top of it can inherit the native security and then have more use cases. So people will flow their Bitcoin. So I think that's the most exciting I would like to see.
So that not a lot of transactions, not a lot of gas. That is a little worrisome. It kind of either means there's only very large bundles of transactions going for total volume. But what are the types of applications that you think will be the most successful?
So let me first of all stepping a bit also. The reason mempool is empty is because a lot of the transaction happening through the TradFi version already, and then what
ETFs?
The ETFs, right? The stocks, the off-chain version, right? So people getting Bitcoin in indirect way, which is completely fine with ETF, right? They bought over 100 billion buy pressure since the approval. It's absolutely phenomenal. That's important, right? We need to have institutional adoption. But for the sake of a sustainable long-term future of Bitcoin network, if the miner is not getting incentivized, they're not actually maintaining the security, and then we have a serious problem of midlife crisis of Bitcoin. Okay, it's 20 years old, now it's 15, right? Now miners actually are incentivized to really maintain the security. And then we seriously have this problem. Oh, maybe one country can have this 51 attack. So,
oh no, we don't want that.
We don't want that. But economic talks, right? If the miners don't want to pay the electricity fee because they're not being incentivized enough, who's going to maintain the security? So
some country could literally say, bring all your miners over here and we'll give you free electricity. And then that country would own the entire mining pool.
Yeah, so this is the perpetual game we need to with the human society we need to play to maintain this very most decentralized, highest level security network, which is the most beautiful chain called Bitcoin. So there's 2 major problems we have. One is quantum proof. I don't want to be fear monger. Quantum proof will come, but we can have a solution for that. Let's leave it that way. 8 years down the road, we're going to figure it out. Maybe 12 years. But the current problem, as what Kevin mentioned, we're working on well. We don't want to build a bunch of weird sidechain with which there's no fee contributing back to the miners. We work with miners. We just made an announcement with M pool, F2 pool, and Spider pool. Like 1/3 of hash rate going to contributing our BVM bridge as well. At the end of the day, if there's no fees through the DeFi or whatever transaction paying the miners, then we have a serious problem. Again, the whole problem with Ethereum in the last 2 years have been massively underperformed Bitcoin in terms of price, in terms of transaction, in terms of many other stuff, momentum, is because they merged to proof of stake.
Yeah, but they did proof of stake, but they didn't lower the fees. The whole point of moving to proof of stake was to lower the mining fees. But really, they didn't lower the fees. They just lowered the electricity costs, so everybody got it.
And screw over all the miners who are really contributing to the Ethereum network as well.
Correct.
So that's the part of a necessity of Bitcoin DeFi, right? We want to bring the transaction back to Bitcoin network, settlement on Bitcoin block, having this Bitcoin security. So answer your question, what is the use case around Bitcoin DeFi? So then we talk about demand. Why we need a Bitcoin DeFi for the demand side? Because people don't want to sell their Bitcoin, but they've been hodling the Bitcoin in the cold water, doing nothing. So
we don't want to be taxed. If you sell it, you literally get taxed.
So people don't want, it's completely fine to hodl, but people are paying the custody fee to hold their Bitcoin. What we need to build is infrastructure to allow people to earn yield on hodling, but it's through other way like staking and other liquidity provision ways to earn yield additionally. So in the next 3 years, you're not selling a Bitcoin principal, but earning yield, not like paying custody fee to whatever BitGo or Coinbase Prime. I'm not trying to say those platforms are not legit. Absolutely great platform, but we can have other options as well.
Like?
Well, Bitcoin lending, like liquid provision on AMM DEXs, on-chain option trading protocols, list goes on. There's all the primitive of DeFi in Ethereum can do that with Bitcoin liquidity, with Bitcoin transactions on L2 with the programmability. But the settlement of transaction eventually verified through the tap tree on Bitcoin block. So we have a Bitcoin security, but using Bitcoin liquidity to do the transactions.
Maybe I can add something. I think this year when you look into the booth in the Bitcoin 2025, almost every booth are saying yield. I think that's a big shift between the payment. Now there are people are finally realizing that their BTC can work for them. To they don't have to sell. They can have some secure way to earn the yield. But of course, at the same time, in the past 2 years when we built Go Network, we have been talking with different BTC holders, big and small, miners, sovereign funds, or even someone we call like $10 warrior, which they want to win big based on just $10. So based on our all the research, not all people have the same risk profile.
Right.
Yeah. So which means when you look into the current BTC-Fi offering in the market, it assumes by nature, it seems like everyone has the same risk profile, but actually it is not. So that's why I think for BTC-Fi offering in the future, we need to have tailored risk-adjusted BTC-Fi offering for different risk profile people.
That's actually a startup that somebody needs to do. So I created this thing like, what kind of investor are you? So they could figure out what their risk profile was.
Yes.
But also so that they would stop sending their Bitcoin to a scam exchange that's really a pig butchering operation.
Mm-hmm.
Because that
not a key, not a
everyday
coin.
people, everyday people who hear Bitcoin and hear big wins and all these, they're the ones who are getting suckered into that. And as an industry, I feel like we need to fix that. So if you've got a layer 2 on Bitcoin,
yep,
how do we make that provable so they know what they're looking at? So they're not looking at something that's just, spun up and it's really a high yield investment platform scam.
Well, first of all, it's DeFi, right? So it's self-custody, right? And I think the people sending to the scam exchanges or they went bankrupt, unfortunately, like the Celsius or FTX, whatnot. Again, first principle, not our keys, not our coins. You're giving your coins to the other people who are holding your keys, right? With custody or whatnot. So for the Bitcoiners who actually want to do DeFi stuff, right? You start from that. Self-custody using MetaMask or whatever Web3 wallets, entering the, programmable like L2s on Bitcoin, like BitLayer and the Goat and others to do things, right? That's the first principle. You need to educate yourself. So to Kevin's point, I was in Bitcoin National last year as well. We did a lot of events and marketing. This year, we've been focused on other things and we met a lot of interesting people. I think the crowd also shift quite a bit. From last year, very degenerate NFT driven with a lot of ordinals people still have a huge hope. I think some of them still have a huge hope as well. But this year is bigger crowd with a lot of financial people with, huge deep experience of TradFi, who worked in ETF firm, major banks and also asset management team. That's the reason they talk about yield, because that's like their bread and butter, right? They don't want to sit down there, 9-figure, 10-figure of assets and doing nothing. Their job is to generating yield for their LPs, right? So that's obviously the question they want to ask on the buy side. I'm sitting on my liquidity. What kind of yield I can get from what kind of risk assumption what I'm signing up for, right? Do you have like counterparty risks, on-chain risk, protocol risk, and so on, right? I think you made a very good point. It's not transparent enough yet for the liquid providers to know what kind of risk they're signing up for. Some of them just lack of knowledge. Some of them just because the supply side who are building those yield products, they're kind of hiding it, right? Try to make it, it's going to all be safe and you're earning whatever yield, right? That's kind of the Luna issue back in days. Everybody will look at the number 20%. It's great. But until the game is finished, right, you need to be careful. You protect the principle with all kinds of solutions, such as, on-chain insurance protocol and so on.
Wait, on-chain insurance protocol. Say more.
Yeah. Oh, okay. I thought you want to ask us a question.
Yes, say more. What? I like that.
Okay. Yeah. What do you want to ask? Say more about. Yeah.
So describe how, because I think insurance is such a good play, especially for backed by Bitcoin and on Bitcoin. And the insurance industry made a deal with the United States a bazillion years ago to buy them out of war debt. So now all of the insurance proceeds are tax-free. So people who are worried about cryptocurrency and taxes and all of those kinds of things, if you create a Bitcoin app, DApp, DeFi, insurance.
Yeah. So your question is that is there any good ones, right? How does it work, right? First of all, look at landscape. I don't think there's a huge, major winning on-chain Bitcoin insurance protocol yet. I don't think that's yet, right? Does it actually create a huge opportunity for the builders? I think so, but I think there's a couple of things we still have missing. One, in order to make insurance product works, we need to have a lot of data. If historical data, we need to have like on-chain data to understand the profile of the wallet holders, right? Are they actually wealthy, legitimate, high credits kind of users, right? Like where the data come from. It maybe could go through like a Chainlink, some other oracles. You even need to go through some Web2 data to understand who's the people behind the wallet, the owner. If they're not actually legitimate users, you shouldn't give them offer all kinds of protected, insurance products, right? And then how you charge the premium of the insurance from there. So how the pricing model works and all that. I think there's still categorically a lot of things missing to build one of the best, like legitimate mass adopted on-chain insurance protocol yet. But I'm gonna say it's a huge demand for a lot of Bitcoin holders on the Bitcoin DeFi, and I see a few early stage ones kind of talking to us as well. Yeah.
Actually, I want to step back a little bit. I think the current situation that people don't trust layer 2 was because in the past this term has been misused a lot. That's the reason you also ask why it's not transparent as the layer 1 itself. So actually we think, as I just mentioned, it is time that we're coming to a stage that this layer 2 technology can really inherit native security from layer 1, the Bitcoin mainnet. There's some criteria that this layer 2 needs to satisfy to be called a layer 2. Like you need to settle your transaction fully on Bitcoin, and if there are any disputes happened, need to be resolved by Bitcoin miners. And also, there should be a bridge, that trustless bridge, permissionless bridge that you can bridge in or out your Bitcoin at your free will. You don't rely on any MPC wallet, any third party to decide your BTC. So I think also the layer 2 itself needs to be as decentralized as possible to inherit the ethos of Bitcoin as well. So I think there's these kind of standards that we are hoping that the whole industry can apply. So this in this scenario, when people say layer 2, it's a serious commitment that this layer 2 has the native security. And this is a foundation for, like insurance or any other Bitcoin DeFi to exist. So I want to step back a little bit for this. And also for the DeFi offerings, what I see is that, as I mentioned, they're risk lovers. They can go to, gambling, GameFi stuff to earn. But for the low risk or, medium level, how they can earn the yield, and where's the yield coming from?
Right.
Yeah, that's another question, right?
So, and speaking of, you were talking about miners, and the thing that I remember is, when my kid was 8, we had to do a science project. He was homeschooled, and I wanted to mine Bitcoin because I had an Alienware with 32 gigs of RAM, 3 GPUs. It was my video editing machine to edit movies. So, I mean, it was hardcore, right? And I could have done it, and he didn't want it. So we ended up building an aquaponics system in my garden tub and making fish and vegetables. I would have been better had we mined Bitcoin. But now, you need ASIC miners. Mining technology has improved, but the prices of miners are still pricing people out. Do you imagine that there will be in the future the ability for someone to get, a Raspberry Pi type setup or $150 machine so that we can have 20,000 miners securing a layer 2 and really enroll the people who are now like, darn, I wish I had gotten in on that, but it was too hard. I couldn't figure out how to set up a miner where they can just walk into Best Buy and buy one, set it up, click it, make an account, and then be one of the 20,000 or 100,000 distributed miners protecting the system. Is that a future thing, or are we always going to make the hash rate so hard?
It's already happened, first of all. A lot of decentralized deeping protocol kind of doing that. Bitcoin in the last 15 years evolved so much, right? I remember the first Bitcoin I got was through OTC in Amsterdam from a guy who was building this FPG miner. FPG was like a second generation before the GPU you were doing that. Yeah. So before GPU was CPU, right? Like the version 0, version 1, version 2. Now it's like version 15 now with like the BitMains, S19, S21 different miners. The industry industrialized. The game of have the fear proof of work, getting the hash rate, and you win that block. And also depends on luck as well. It's extremely harder now. So to be practical, it's difficult. That era of you getting a Raspberry Pi randomly from Best Buy and you earn every single 10 minutes a Bitcoin.
No, I'm not saying you earn 10 minutes out of Bitcoin. I'm saying you do it like a masternode system where, you're staking your coins, but there's some randomized oracle that's distributing the
the system we were working on also is the BVMs, the roll-up model is to have the Litecoin system. Right, so there's another fees, not directly every 10 minutes, 20 minutes on the Bitcoin block you're mining out, right, for other kind of processings on the L2 side as well. But I think if we talk about proof of work community, right, this is not a proof of work community talk, right? There's like Litecoin Summit and Deeping Summit, right? There's a different type of like proof of work miners can get interesting mining fees, right? Contributing your hardware, but not necessarily on mainnet Bitcoin layer 1 anymore. That's the reality of that. But I think for the user at this stage, it's not about, you contributing your little miners to do things. I think there's many other ways you can get exposure for Bitcoin. And the interesting part is to getting yield on that, right? So that's I think that's the.
Sorry. No problem. No, finish your thought.
I think let me finish my point with miners first. It's very important to get the miners to really incentivize to actually maintain the network. So what do we just announced this Monday? Working with the top mining pools, engage them with to become our BVM bridge operator, and we have for future bridging fees. We're gonna share fees to them to provide another new revenue stream to the mining pools. Is first of all, you need to understand, being a mining company, you have to be profitable. It's a freaking cutthroat business.
I know.
It's a very competitive business because everybody is on top of the game. The foundry competition with the N pools, the F2 pools, it's great to work with N pools. But they are seriously worried as a businessman. 8 years later down the road, another 2 rounds of halving. Can Bitcoin really achieve $2 million per, with the electricity fees, all the miners, machines? We hope yes. But
yes, I am optimistic. Yes.
Yeah, I want a 10 million. I want a 10 million, right? But for those business people who are also actually quite risk averse, they can operate them very heavy capital intense business based on hope. So they need open up the revenue stream. It's great to work with them, and it's very important to work with them to maintain our high level security. So I think that's the purpose why we need like trust minimized bridge and also the new L2 or different ecosystem and bring use case back to Bitcoin and settle on Bitcoin block.
Agreed. Nice to join us.
Thank you so much for that.
4 minutes. Go.
4 minutes, yes.
So we got 4 minutes. So
Let's do it.
1 minute. Who are you? What do you do? And what is your big thought on Bitcoin DeFi?
Of course. Hi, guys. Parth here, core contributor to Tachi Meta Protocol for Bitcoin. We are building the programmable successor to Lightning with the same security guarantees, and we're powered by Bitcoin full nodes only, no sidechain L2. Consensus remains on Bitcoin using the cryptographic methods of bulletproofs and, of course, our own recursive inclusive proofs. All that means that Bitcoin security for Bitcoin holding institutions to unlock the millions of Bitcoin that will want to get yield or programmability in the future.
And speed-wise, do you settle more than every 10 minutes like Bitcoin does?
Yeah, so with the cryptographic proofs that a la Lightning, we're able to have on the runtime execution finalization at 2 to 3 seconds. So without using a separate consensus mechanism, just like how Lightning settles payments through elliptical curves, we have our own mechanism to do that much faster than having to wait that 10 minutes.
Okay, and how many transactions per second as compared to, say, Bitcoin, Visa and MasterCard?
Yeah, absolutely.
Or Cardano.
Exactly.
Or Solana.
Exactly. So Tachi's custom SAT VM runtimes, which are powered by Bitcoin full nodes, will target at least 60K plus TPS, but we'll get some WASM custom runtimes, which power AI agentic payments on Satoshis natively, which can go up much higher. But that's fine-tuning with different languages.
You said magic words I like. AI agentic agents.
Oh, yeah.
Those are words that make me happy. Okay, so final thoughts, gentlemen. Bitcoin DeFi, what is your number one either tip, insight, alpha, like that everybody in this room is going to go, oh my God, I heard that here first.
So for Go Network, you have the opportunity to earn native BTC yield on layer 2. Because we are using the decentralized sequencers, which you can run that sequencer, and that sequencer will collect BTC gas fee naturally from the transaction, volume. So I would say this is a very sustainable BTC yield strategy for low risk and medium risk levels.
But more than a cup of coffee.
For sure, and the APY can range from 2 to 10 percent APY based on transaction volume. Yeah.
Final thoughts?
So BitLayer, we pushing hard on the multi-ecosystem strategy, being one of the largest BVM bridge operator, working with 1/3 of the Bitcoin hash rate mining pools already, going to soon be 60%. We have a pretty big ecosystem of DeFi users. We educate and contribute. And through all the Web3 wallet campaign, currently have 3 million users, 55 million transactions already made. We can continue this year, by the end of this year, maybe 200 million. So Bitcoin DeFi is actually happening. It's not new. It's happened since last year, but this year we're going to see exponential growth. We want to bring yield products across low frequency use cases like staking, lending, to the high frequency use cases like on-chain option protocol, prediction market, option trading protocol, to all kinds of Bitcoin holders.
Should I be worried that you just said 60% of Bitcoin miners? Because, I have this 51% attack fear.
We are contributing fees to them. They're earning revenue.
Okay. Good.
So to maintain high level security.
I just needed to, I worry. Okay, final thoughts.
Absolutely. Just to wrap this up, absolutely. You're absolutely right. Bitcoin DeFi has been maturing. Now the rails have been changing from WBTC to the payment channels, to sidechains, to L2s, to BitVM rollups, to now native Bitcoin meta protocols. All that means is that larger Bitcoin holders and institutions who are still skittish about putting their Bitcoin on-chain get less so over time as they see the security guarantees of putting their Bitcoin on-chain and earning yield are just getting better and better and better. And more importantly, the tooling and the actual use cases, which were already stress tested for the last decade in Ethereum or Solana or Cosmos, are now coming natively to Bitcoin. That's the key case.
I love it. Well, thank you, gentlemen. Big round of applause.
Thank you.
Innovate, bringing assets to the digital state. From finance to games, we're redefining, connecting the dots. The future is shining.